Okay guys, I'm going to make a video on a walkthrough for some intraday price action of the Australian dollar, US dollar. But before we start, I'm going to show you some proof, of course. So I was able to catch this sell from up here, covering just down at it buys and imbalance down there. So here is my executions, and before we start, this is not sort of any financial advice. This is just for educational purpose only. You should only trading with demo accounts. And yeah, we're gonna start off with Wednesday. So this indicator helps me to identify key highs and lows during the day. Sorry if you hear that background noise. But it's a session indicator that's basically identify key swings in the market and high probability liquidity pools. So during Wednesday, we have the low of the day formed here. We have the New York morning sell side. So we have sell side liquidity down here. And we have an intermediate term high right here. So what is happening? Well, we have a market structure shift right here with a buy side imbalance right here, and we of course got the FMC news running the buy side pool from the morning session. Remember, this is just a walkthrough. I wasn't of course able to catch all these trades, but it maybe can help you to identify there's a lot of trades intraday, and I just want to show you how I mark off the charts, how I going in with the mindset of where the setups are likely to form and so on. So here is an example of you, of course, yes, you can buy at this fair value gap here, but the FMC, I'm staying away from the markets, so this is not a setup for me. But I can just show you. I think it was 10-minute. Yeah, you see, or 15-minute maybe it was. I don't remember. Yeah, you see, this is also a 15-minute intermediate term high here. It will break 15-minute fair value gap and boom, takes out the buy side here. But anyway, when price comes up here, it breaks down again, so we don't have a continuation up, we're creating a high. And if this price was going to take off, remember, down close candle should support price, but it didn't, so it breaks down. So we have a high here, which is obviously some easy buy side liquidity to identify. Buy side liquidity right here. So when we come from to the ascent session, we're pretty much inside, and trading inside the range is, to me, a little bit less probability because it's a little bit less obvious to identify which liquidity pool is going to hold and so on. But it's all up to you how you want to trade. But here I have a market maker sell model through the Asian. We have a consolidation. It leaves the consolidation, trading right up into this high here, and I think we have a small little fair value gap here, which is trading up into, yes, 50-minute fair value gap right here, trading up and breaks down. So coming into the next session, which is obviously the London session, you're still inside the high and the low here and here. So you're inside the previous day's low sell side liquidity. Put it here. And during the early stages of the London, we have a run on sell side in form of this FMC lows down here. So we are down low. We doesn't take out the previous day's low here. Instead, we attack internal range liquidity here from this low to this high. And we have a consolidation here. It leaves the consolidation, taking out sell side liquidity. And what happens? Intermediate term high, market structure shift right there, fair value gap, bullish breaker. Market maker, buy model, consolidation, it leaves, takes out liquidity, low, breaks up. So short-term shift here comes down to rebalance into this bullish breaker, takes out the obvious liquidity from the gap time here, trading up into this what? 15-minute intermediate term high. Why? Because this high rebalance, remember this fair value gap from here. Show you again on the 15-minute time frame. Rebalance, fair value gap here, and here. So here we have a rebalance. This becomes intermediate term high. This high should not be violated if you're reaching down for the sell side down here. So it comes up in the early stage of the London session and sells off. This could be a potential setup for you. Maybe, maybe not. I'm just going through some price action of how I read the price. Maybe this doesn't necessarily mean it's a trade for me or for someone else, but just show how there is actually trades everywhere all the time. And yeah. So what happens here now? Yeah, we obviously have the sell side liquidity, which is the previous day's low here. We started a new day here. So we're down low, sells off from here. We're down low from here. We're taking out sell side liquidity and get a reaction. What does price create? Fair value gap. Here is when it can get a little bit more tricky, because on the 5-minute time frame here, we barely have a market structure shift here. But I think if you go to the 2-minute or something, yeah, 2-minute here, you see this small little portion here of price intermediate term high. So we have a market structure shift here on the 2-minute, but we can use the 5-minute imbalance here to get an entry. This is not an ideal entry for me, because we are not down in a discount. So this is the purchasing, this is the range if you draw a fib from here to here, 50%. If it's reaching down, like down here, yeah, maybe you're following your rules to take this long. I don't know. I'm just going through some price action for you. Okay, so we have took out daily sell side is purge or swept. We accelerate, takes out the buy side pool from the FOMC. Here is a little bit important thing. When we take out this buy side here, maybe you identify this, okay, we created a sell side imbalance here, now we can go short. Remember, we must have a market structure shift before going short. So this is just a pullback down into the range from this low to this high, going down to a discount again and pushing higher, creating what? Equal highs. So this is not a, maybe I'm showing it, this is not a high probability sell just because we have taken out this sell side or buy side pool here, because we have no, like, you see, market structure shift. But anyway, going forwards, price comes up once more here, then we have a breakdown. What do we break? Intermediate term low. So we have what? A bearish market structure shift after taking out buy side here and basically stop on to this high here. So we have a market structure shift here, and here is also an example where maybe you was thinking price gonna reach up into this farewell gap here. It barely doesn't. Why? Because on the 1 minute time frame you see this imbalance here. And why doesn't price need to go up above this high here? Because we have a bearish breaker. Look at the 5 minute again. The 4 minute maybe. What's happening now? Yeah, anyway, we have a bearish breaker here. We have a low, a high, a low, a low. So price trading inside this bearish breaker here. So anyway, from this low to this high, you can go short. What is this now? It's an intermediate term high because it has rebalanced a fair value gap, and now can take off this now. We also have a break of this low here, which is a what? 50-minute intermediate low. So we have a little bit more of a higher time frame breakdown. See here, rebalance and breaks down. Here is interesting because I'm just going to delete this so that's a little bit more easy to see what is this now? Intermediate term high. Why? Because we have a small imbalance here. Comes up to rebalance, breaks down. So we have a 50-minute shift here. This zone right here becomes a good area to sell off from. Why? Because this is an intermediate term high. Price should not reach up above this high. This high should hold price from going up. Instead, it should go down. So I mark off my zone, or whatever you're going to call it here. Very well, gap here. On the 50-minute time frame. Then when price is on a 2-minute, we have this zone, or whatever you want to call it, from the higher time frame, price reaching up into this little area here. What does price do? Reaching up, rebalance. So this is a rebalancing in the 15-month time frame. Short-term shift again, and what? Fair value gap here. So that's basically how I going through the price action intraday, day after day, to let me kind of learn of where price is reaching for next, and where it should make a shift, and where we have setups forming. So thank you for watching. I hope you learned something, and see you next time.